Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Washington, D.C. Metro, to Real Estate 360 Live. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is the off-air phone number, which is 877-245-2030. That's 877-245-2030. Or you can visit us at the web at realestate360live.com. That's realestate360live.com. On the right-hand side, there's an Ask a Question button there. All you have to do is click that, put in your name, contact information, and your question, and I'll get back to you as soon as possible. Like I said, it can be anything in reference to real estate, whether it's, trying to get your credit fixed, trying to obtain a mortgage for a purchase or refinance, whether you're trying to buy or sell a home or short sale, whatever it may be. Even if I don't know the answer, I'd be glad to find out the answer for you or point you in the right direction of a person who can take care of you. I'm going to jump into this week's Market Movers. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. Go to homegain.com today to see what I'm talking about. All you have to do is type in your home's value or home address online, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So when you guys get a chance, check that out today. It's homegain.com. So wanted just to let you guys know what's on deck this week that can affect interest rates if you're in the process of obtaining a home loan. Obviously, we have the Republican convention. Also, the Treasury is going to be auctioning off $99 billion of notes. We have Europe, which is still unable to get anything accomplished. We have the second reading on the quarter two GDP, two reports on consumer confidence and sentiment, the July personal income and spending, and the most important event of this week is on Friday. Bernanke will open the Jackson Hole Economic Summit with a speech that many expect to clear up if and when the Fed is preparing to do another easing plan or not. There are obviously still many out there that are unconvinced that the Fed is about to ease with more Treasury and mortgage-backed security purchases, but this speech they're hoping will clear up the air, and I think this is basically the big thing that Wall Street will be watching all week. So, if you're contemplating what you should do as far as locking in your rate or whatnot, there's a lot on deck this week that could really move interest rates up or down. Obviously, the markets came back in the interest rates, mortgage interest rates favor last week, recovered a lot of the losses from the prior 2 weeks. So at any time, you can expect that, things might jump back for the worse. The stock market's been rallying over the last week or so pretty heavily. I mean, even Apple was up to almost $670 there, Lewis. Wasn't it something ridiculous? I mean, they're supposed to all-time high. All-time high. Yeah, I mean, they're so, and I really feel like, the stock market is it's a mirage. This is not an accurate reading of what's going on in the overall economy. Obviously, the banks and other institutions are the ones that are really driving this, and the low interest rate environment is driving the stock market. But
here's one for you, Ryan. Household income is down in the last 3 years from the period of time which they consider the recession, and it's down even further since the year 2000. Median household income is down to about $50,000. And it used to be about $57,000 in 2000, and it was about $54,000 at the start of the recession. So that's a better sign of how people are doing. If their incomes are down, who cares if the stock market is up?
Yeah, and not only that, it tells you who has the money to be investing in the stock market. If household income is down, there's less discretionary income to be spent out on other investment opportunities, whether it's buying stocks, bonds, gold, silver, real estate, whatever it is. They don't have any more money. They have less money than they did 3 years ago. So, the economy is getting worse, no matter what the stock market says.
They have debt loads, too, as well, and they're encouraged because of low interest rates to borrow more money.
Yeah, borrow more money, and in the end, things will turn around. Unfortunately, that tends not to be the case. Things don't just turn around on a dime. It's not just overnight that these things happen. I mean, obviously, we've been coming out. Well, they've said we've came out of the recession. I believe we're still in it. I believe that there's certain areas geographically in this country that are doing better than others, and most of that has to do with the how abundant the jobs are in certain areas. I feel like the D.C. metro area, as well as New York and some of the other big metropolitan areas, they benefit from a lot of jobs. So naturally, that's going to be a better economic environment for most people. Now, not everybody in the D.C. area is doing well. There's still plenty of people out of work, but overall, I think the numbers tend to be better than the national averages.
Well, that's because there's two types of employment: public sector and private sector.
Yep.
And the public sector is doing fine in the Washington D.C. area, unlike in other areas, because states have had to cut back on public sector workers, but the federal government hasn't cut back at all.
Yeah, I mean, if you just look, if the government was just a normal individual that had debt and couldn't pay their bills, the average individual would basically have to do one of two things. They'd either keep paying their bills and struggle to get by, or they'd go bankrupt. But yet the government, on the other hand, they continue to push more and more programs out there, costing the taxpayers even more money, and their only option of getting out of this is to keep printing more money.
Right. So if you were a company, you wouldn't be hiring more workers and making more investments if you were out of money, if you were bankrupt. But the federal government has the advantage of being able to print money, and then they can send it to companies like Solyndra. They can expand agencies and hire more people and give raises and bonuses and so on. They're the last people that should be giving raises and bonuses and hiring people, because they have the least amount of money. They're in debt.
Yeah, it's very ironic, especially when you hear that they're hiring 60, 70,000 more IRS enforcers to come after people for not reporting taxes properly or whatnot. But yet, who is there to enforce what the government's doing? Who is there to slap their hand and say when is enough enough? It's not going to happen.
Supposedly, that's what the voters are supposed to do. But you see, it's difficult because if politicians offer the voters something for nothing, then they get voted in. It's very hard for a politician to devolve himself of power and say he's not going to give you anything. He's just going to give you, your rights back or liberty, but he's going to cut your benefits. People are less likely to vote. It's no different than in high school when the politician for the student council offers free ice cream. That's the guy who wins.
Yeah, I agree with you, but I mean, and the other thing is that
even though people know they're going to get sick from it, doesn't matter. That's the guy who wins.
Yeah, well, and a lot of the times they'll say that they had this great plan, and then they end up taking office, and then nothing actually happens. They do direct opposite, which is what most politicians do.
Or they get Potomac fever. They start getting wined and dined by lobbyists, and then they start to do the bidding of the lobbyists, and the lobbyist says, "Look, you want to get reelected, you kind of need my money to go." So they forget kind of what the constituents voted them in for.
Yeah, I mean, in this spending, I mean, obviously we've been saying for the last 2 years, we say that, kicking the proverbial can down the road, and it can't be more true. Louis, there's been actually a lot of people out there that have saying that they feel like right after this election, everything's going to hit the fan. And that, it's kind of a buildup. Nothing's really going to happen until this election. But after the election, we could really see an all-out economic catastrophe happen.
Well, and that's why I think they won't do QE3 until after the election. There's no point in doing it earlier. They can slip it in. They can use some type of pretense. Well, we weren't going to do it, but now we have to do it. That's probably what's going to happen.
Yeah. And, for you guys out there that are wondering, okay, well, let's just say that, that happens. After the election, Fed comes out and they says, we're going to basically print more money out there. We're going to buy more treasuries and mortgage-backed securities. What does that mean to me? Well, it might not mean anything to you, because if they continue to do what they've been doing, it hasn't necessarily pushed interest rates much lower. So they keep saying that somehow this is going to stimulate economic growth and job growth, but we haven't seen that. And from QE1 or QE2. What it's going to mean ultimately is that, it's going to keep devaluing the dollar that you currently have. But it's also, on the flip side, there is still an opportunity for you to be able to take advantage of low mortgage interest rates. Now, whether you choose to do so, that's completely up to you. But I will tell you that we may not ever see another, point in time where interest rates will be this low again. Because if we go through, which could be a hyperinflationary period, which could skyrocket everything, then I could really see, home prices really being crushed from that. But if you had locked yourself in to these low interest rates for a 30-year fixed period of time, you're somewhat protected because you know what? You're not just buying a house to buy it and flip it in a couple years and make some money off of it, because that's what got us into the mess 5 and 6, 7 years ago. Now it needs to be, you're protecting yourself from inflation. You're buying this home because, you want a nice place for your family to live, and you're locking in your long-term cost of shelter. And that is very important right now. And so it's less about, just because real estate agents are saying, now is a great time because it's a low interest rate environment. Well, why is it so great that we have this low interest rate environment? What is that really allowing you to do? It's really protecting yourself for the future. I firmly do believe that. I mean, you can, and for those of you out there that already have a property or two and you want to buy more, you're going to be in a good situation. Because if interest rates ultimately spike and they go into 6, 7, 8%, home values are going to come down. But it doesn't necessarily matter to you as much, because what you're going to see is you're going to see rents shoot through the roof. And if you're protected by that long-term fixed rate, you're not going to be the one that's scrambling like the majority of people out there that are kind of renting from year to year and seeing in the D.C. metro area these 10, 15, 20% rent hikes. So that's a very real thing. As far as the timing of all of it, I'm really unsure. This could go on, it could go on for an extended period of time. It could happen the next month, next week, next day. We just don't know. So, I just want to urge everybody out there, even if you're thinking about potentially purchasing but unsure if you can, just reach out to a professional that can go over your options. I'll be glad to help. Number is 877-245-2030. That's 877-245-2030. When we come back, your credit report could be repulled right before closing. What you need to know when we come back. Stay right there.